Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. It's still not looking bearish to me. I talked to you guys in a previous video about my orange trend line here that connects February 16th low to March 6th high and April 5th and April 6th low. Multiple tests of this orange trend line. All right, I had it around the 405.5 to 406 zone. I like to give it a zone. And once again, that zone held as support. This was today's price action right there. Okay, and look at in the previous days, we had a bounce here and a bounce there. Boom. Okay, so it's a strong support level. If you're a supply and demand type of trader, it was definitely a strong demand zone. All right. And because of this, as I mentioned in a previous video, I was bullish, and I also wrote it here on my Discord. I'm thinking as long as 405.5 to 406 zone lowest holds with 408 to 408.5 zone as the support, SPY could go back and test the top of the range at 411.5 to 412 zone with 410 en route first. So pretty much what I was saying is, as long as above 405.5 to 406 zone, I was bullish and favored more upside. I write a bull case scenario and a bear case scenario, and I try to go into details in my Discord and try to be clear. But I wrote here, while 408 is first support as of writing, when I was writing this morning around 6 in the morning, I put here, loss of 405.5 to 406 zone is when the bear case fully starts. So, okay? So I wrote multiple times in multiple different ways that I was not bearish until we broke down this orange trend line. As long as above, I mentioned that I was bullish. Now you see here, we got the buying pressure. This morning, I was waiting to see it test that support, and we got buying pressure. All right? So a lot of time when I'm watching tests of support, I'm not just watching to see if it breaks down or if it breaks out. I'm also watching the behavior. Is there buying pressure? Is there selling pressure? So when I saw that there was buying pressure, I actually went long around 406.5-ish, 406.6-ish, okay? And I actually wrote here in the Discord that the support is defending. If you long here, cut loss at 406 or 405.5 fail as support on the 15-minute chart. So when I entered long, my stop loss wasn't until down here, okay? Or down here. As you guys can see, it never hit my stop loss, and it gave us a nice melt up to the upside, all right? So that's how I traded today. I long close to the support. If it would have broke down that support, I would have cut my loss. I entered with a plan. I didn't just enter because I was biased. I entered with a plan just in case the trade went against me, and luckily for me, it did not go against me. All right, and I do post my gains, but I post it in my Discord, and it's for my Discord members to see if anybody cares. Usually no one really cares, and I don't really care. What I mostly care about is, can Uncle Charles help his viewers? And I hope I did. All right, so with that being said, what's the plan now? So now that we got multiple tests of this orange trend line and bulls stepped up where they needed to, all right, we need to see follow through and breakout of some resistant levels, starting with 410.25. That's a 78.6 fib level. All right, now if we go back down to a smaller time frame, I've mentioned to you guys in the past, the market, you know, it phases between two phases. It cycles between two phases. The trend phase, then there's the chop phase, okay? And they're both necessary. The trend phase gives us the one directional move, whether it's to the upside or to the downside. And the chop phase helps build strength for that next trend phase. And it usually does it by chopping in a range, bear flagging channels, you name it, continuation patterns. Okay, so when this enters the chop mode, it's on us to identify the range and wait for the breakout or the resistance. Okay, so in this case, like if you look at this chart right here, can you guys see where the trend phase was and where the chop phase was? So here's the trend phase. All right. And here's the chop phase. All right. And now we're still in the chop phase, or we might be trying to break out of the chop phase. Okay. So now you guys see it with your own eyes. You guys know what it is. Now, looking at this chart, I need to identify the chop, right? The chop range. So as you guys know, that 405.5 to 406 zone was a level that I've been watching, okay? And we have multiple defense of this level right here, okay? Around 406 to 405.5, okay? And then you look at the top of the chop range. Where could the top of the chop range be? So it's looking like right here. All right, we had multiple tests of this area around 409.3-ish as resistant. All right, so that's our chop range, 406s to 409.3-ish. All right, today, look at here, guys. We broke from this chop range. All right, so that 409-ish level, that's based on the also can be based on the 5 DMA on the daily chart. But you guys can see here that the market has treated this zone or level as a resistant. All right. So with that being said, as long as above 409.3, the breakout is intact. The breakout is intact, and we can see more upside. Go back to the daily chart, starting with 410.25. If that clears, that could put 411.5 to 412 zone in play. Now, in the previous video, I had people saying, Uncle, you got too many levels. These levels, I got these levels, and you should add them into your charts as horizontal lines like I do. All right, the reason for these levels, so I know when I should short and I know when I should long. Okay, that's all it is. Breakout of resistance, long. Breakdowns of support, we short, okay? And watch out for the false breakout and the false breakdowns as well. False breakout, look to short. False breakdown, look to long. These things happen all the time in the market every single day. That's why I have these levels. All right, keep in mind, it's what works for me. It might not work for you. You just got to find what works for you. I find it very simple when I have levels that I can watch, and depending on what the market does, it's easy for me to react. If it breaks it down or there's buying pressure, you know, I know if I should sell, I know if I should buy. All right, so what I'm saying now is if SPY breaks out above 410.25 tomorrow, look to long, targeting the 411.5 to 412 zone. That means that's where you should take profit. And if you think the market will go even higher, you can just either keep holding as long as SPY is above 410, or you can secure most profit at the next level and leave a runner in hopes that the price will go up even higher. Okay, above 412, I got 415 in play, previous pivot high, and also the top of the channel is now at 417. All right, so above 412, 415 and 417 would be in play. Okay, but we first need to break out above 410. All right, look to long above 410. Make sense? If it gaps up above 410, watch for the retest of 410 as a support. Watch for a gap fill, possible gap fill, and use the false breakdown setup to look for long positions. Or you can wait for the breakout of the next resistance at 412. All right, breakout of resistance, we look to long. All right, that's the bull case scenario. Now today we closed above that 5 DMA. So SPY, like I said here, SPY needs to break back below 409.3, break back within the chop range. That'll give us a false breakout, and it could possibly fill back down to the bottom of the chop range around 406 to 405.5. Okay, I do have 408 and 407 as levels to watch within this range, but if we get a false breakout setup, it's possible we go back and fill the bottom. All right, we do have CPI on Wednesday, tomorrow's Tuesday. You know, I wouldn't be surprised if we chop some more on CPI. All right, but like I said, the price action is the shepherd. We follow the shepherd. We are the sheep style traders. We're just sheeps. We follow the shepherd, which is the price action. We are neither bullish or bearish. So if SPY stays above 409.3 and breaks out more resistant, just follow it. Don't fight the trend. Don't fight the price action. Look to long. If it breaks back below 409.3, don't fight it. Look to short. All right? Let's keep it simple as best we can. Triple Q, it's now I'm zoomed out on Triple Q. As you guys know, I got the fib level from all-time high down to October low. It's still bouncing off that 38.2 fib level at 313.2ish. Okay, we're still getting buying pressure. I will not turn bearish on Triple Q until it breaks back below 313. Okay, 313.2ish. I will look to short if that level fails. But as long as it's defending as support, I'm assuming that bulls have more strength to go up higher. It needs to chop a little bit. It needs to consolidate, yes, but it's not breaking below a critical support level, all right? So, with that being said, it closed around 317.8. I got 319 and 321 as the next resistance level. Look to long. If any of those resistance level clears, play it level to level and leave runners above 321. We got a gap around 323-ish. All right, above 323, I got 326.5 and 331.4-ish as targets, all right? Now, the first support right now is 315.5, as you can look to short if 315.5 fail, with 313.2 as the first target, level to level play or something. But like I said, I will be a lot more bearish below 313.3. That's when you could swing shorts if that level fails. And I would definitely favor more downside, a deeper sell-off, with first target being 311, 309, and 307, with 304.8-ish and 302 in play. Okay, I play it level to level. I short the breakdowns of support. I take profits at the next level. Like, all right. IWM. Look at this. IWM recaptured this blue trend line. If you were watching this intraday, it was respecting this blue trend line, but then at the end of the day, bears just couldn't keep it below. All right, so as long as above 175, 176.5 is the next target. Look to long above 176.5, targeted 179, 180.3 and 182ish. All right, look to short. If 175 fail as support, you can look to short breakdown 175 or breakdown of 174.3, targeting 172.5 and 170.3 and 167.5. All right. Like I said, we short the breakdowns of support, long breakouts of resistance. We play it level to level. Tesla got that false breakout of the bull flag last Wednesday, and it did show follow through. Today, Tesla went as low as 176. Once again, bouncing off that critical 176 level. We see it in the past back in March. That 176 level defended as support multiple times and is doing it again. And it managed to close just above the 38.2 fib level at 184.44. So to show follow through tomorrow, it needs to clear 186 to put 190.3 in play. Above 190.3 would be pretty bullish. Targeting 194.5, 197, 199, 203, and 206 would be back in play. Okay, I would be bearish below 184.4, but I need to see the next support at 180 fail as support to target 176 once again. And if we break down 176, all that buying pressure we've seen so far this year would be canceled, and we could possibly see more downside for Tesla. All right. Apple, it managed to bounce off that Fibonacci level. All right. 61.8 fib level at 160.49. It got some buying pressure from that level. Okay. So watch the resistance at 162. It's above it in the pre-market, but watch where it opens tomorrow. If it opens above 162 tomorrow, watch the next resistance at 163.5 and 165.5. Long breakouts of resistance. All right. I need to see 160.5 fail as support. That's when I would short Apple, targeting the gap fill at 158 and then 156.2. All right. Now the VIX, guys, the VIX, I got a range here. 20 is a resistance level with 18.5 as support. We've been chopping in this range, all right, for the past couple of weeks. Overall, looking bearish. Why? Because so much selling pressure, so many wicks at the 20 level. All right, so to show follow through, it needs to break down 18.5 to put 17 and 15.7 in play. All right, now the only way I'll be bullish on VIX is if it breaks above 20. All that selling pressure on 20, if we break above it, it cancels all the selling pressure. Selling pressure is all absorbed, all the sell orders absorbed, and we'll possibly see more upside to 21.3 and, sorry about that, and 23. Above 23 would be a breakout of this pink trend line that I have here. We could possibly see more upside starting with 26, then 28. All right, needs above 20 to be bullish, needs below 18.5 to trigger more downside. Now the DXY is looking bullish. Unlike the VIX, DXY breaking out this yellow trend line that I have and recapturing this green trend line that I have. Okay, so to be bullish, it needs to stay above 102.3 and clear some resistance. Clear 103.4 and 104.1. All right, but it must stay above 102.3 on any pullback, because if it does, this recapture is a false recapture, and we can see more downside back down to 101.3 and maybe 100.7-ish. Okay, let's end this with the option flow. This is filtered for 500K premiums or above, 67% into puts. Nothing that really sticks out to me, but 67% into puts. Triple Q, 62% into puts. Nothing that sticks out to me. IWM, got anything for us? 100% in the puts, mostly block orders, and the one sweep order is a 166 strike price. All right, for May 19th, over 6,000 in size. Could it be a hedge? I don't know, but it's looking like a bearish bet from here. Apple, 100% in the puts. Tesla, 92% in the puts. We're seeing some aggressive bets to the downside for Apple still for the month of April. Excuse me, for Tesla still for the month of April. Let's see if the price action can confirm though. Okay, VIX. Nobody bought any flows for any options for the VIX. All right, guys. So thank you guys so much for watching. If you guys would like some more support and content from Uncle Charles, please consider joining my Discord. I would love to serve you guys at a higher level. Other than that, have a great evening. Peace.